All right, well, welcome everyone to today's webinar from M3 Insurance. I'll introduce myself and a little background here. So my name is Tom Rebay. I work for General Mills. My background is a research agronomist. I'm a senior manager at General Mills. I lead our agriculture sciences team at General Mills, which supports our grain and other ingredient sourcing in particular. I'm also a Minnesota AgriGrowth board member for the past almost 3 years, and so I want to thank everybody for joining us today. As a relatively new member of AgriGrowth, M3 Insurance is an independent insurance broker and risk management firm. M3 Insurance focuses on sharing best practices for evaluating coverage options in today's evolving marketplaces. Today's presenters will cover current market trends, explain why premiums are shifting differently across lines of coverage, discuss how industry consolidation is impacting buyers, and highlight key coverages to consider based on your profile, including cyber, drone liability, and pollution. And for today's presentation, we'd also like to make sure that's more of an interactive experience. So feel free to ask questions throughout the webinar by raising your hand or simply add your question into the chat. The chat will be monitored and those questions will be asked at that time then. There'll also be time at the end of the Q&A as well. So you can ask your questions if needed then as well. And with that said, I am going to turn it over to Jen at M3, and she is going to start us off today. Thank you.
Tom, thank you so much for that kind introduction, and welcome everyone to the webinar. We appreciate your time today. And as Tom mentioned, we absolutely want this to be interactive. The worst webinars are ones where everyone just talks at you. We want you to feel like you've left this webinar with gaining information and insights that you can put into practice in your operations. So as Tom mentioned, please put your questions in the chat or raise the hand. We will absolutely answer them as we go throughout the presentation. As Tom mentioned, my name is Jen. I lead the Food and Ag Practice Group at M3 Insurance. And just a very brief highlight of who I am. I did not come from the insurance industry. I came from the agricultural industry, grew up on a farm in Northeast Iowa. And for many years prior to joining M3 in 2017, led an international team at the Wisconsin Department of Agriculture. So ag and food processing is in my background. I joined M3 and helped to bring resources, knowledge, and information to our clients and to the greater agricultural community, and delighted to be part of the Minnesota AgriGrowth Council. And excited to be with my team members, Matt and Tarek, who you will get to know in a few minutes during our presentation. Tom mentioned already that we're going to be covering a number of different topics. We'll start out by just a very short introduction to who M3 is to kind of set the foundation. And then Matt will talk about insurance industry updates and why these matter to your operations. There's a lot of change happening in the insurance marketplace that unless you're steeped in the industry, you may not hear about. So he's going to walk you through some of those changes, including changes in premiums and how they may be impacting your operations. We'll then transition to talk about coverage topics that are impacting agribusinesses and food operations, focusing on a handful of coverages that impact every organization, cyber being one, pollution being another, and then also directors and officers coverage. Every single agribusiness and food processor has leaders in their organizations. Many of you have boards. If you're a co-op, you have a farmer board. And directors and officers insurance coverage is a very important policy to have in place for your leaders. And then lastly, we want to leave you with some tips that will help you become more knowledgeable as an insurance buyer. The phrase knowledge is power is true when it comes to that broker and insured relationship. We want you to have some information that you can take to your broker and use as a tool to be more informed and get the most out of what you're paying for from your broker and insurance relationship. Very briefly, M3 Insurance, Tom mentioned, we're an independent insurance broker. We're founded in Madison, Wisconsin, but we have offices in the upper Midwest. Founded in 1968. We are independent and we are employee owned. We're owned by our 68 employee shareholders who are active employees in the firm, but we have over 500 employees throughout our agency, and we specialize. Our practice groups focus on the specific industries. I lead the Food and Ag Practice Group, and that's what I do day in and day out. 66. A little bit more about M3. We have clients throughout the country. our office in Minneapolis, Matt works out of. Tarek and I are based here in Madison. And without further ado, I'm going to turn the mic, so to speak, over to Matt, who's going to give you some pertinent industry updates about the insurance world.
Thanks, Jen. Yeah, Matt Schwisser, nice to meet all of y'all today. Property and casualty client executive here at M3 in the Minnesota office. About just over 12 years in the industry. Minnesota is actually my fourth state that I've been practicing in. Started in Wisconsin, spent about 7 years in Texas, and about 3 years in California. So coming back to the Midwest to rejoin M3 and start this endeavor here in Minnesota. So appreciate the time. Honestly, just wanted to give you a few updates here in the industry and kind of what you can expect and some tips on how you can kind of handle of what's coming down the pike from an insurance industry perspective. So there's good news on the horizon in a lot of instances, right? It's been a very hard market for the last, call it 5 or 6 years, increasing premiums across many lines. And a lot of that was dealt really to the uncertainty around COVID, and then some really bad catastrophic storms that have hit the United States as well. And so when insurance companies don't understand risk, they get scared and they jack up the premiums, right? So if they don't really fully understand what's coming down, call it the next 2-3 years, they charge accordingly. And what's starting to happen now in the last year, and I think for the next year, call it 2, maybe 3, is a softening of the marketplace, which essentially underwriters and insurance companies have been able to more so put their arms around these types of catastrophic risks and price accordingly for them. And when they've done that in the past, they've obviously, increased the premiums. So what they've done is had some sort of surplus in the last several years, which allows them to now not have to charge the massive premium increase that most of you have probably been seeing year over year, right? Two things I really wanted to focus on in this space: the commercial property piece. So this is historically, depending on your geographical region, been a tough risk for insurance companies to place in the last several years. It's starting to ease up a little bit, but they really want tight controls in place. And so the main one that we've seen in our industry so far is the tightening on fire protection. And so even if you have an older building or older facilities, making sure that your fire protection's up to code and not from 2020, not from even 2024. It's an ongoing battle that insurance companies really are being hard and fast on to make sure that protection's in place, especially in your industry. And so that's one thing that, even though the premiums are dropping in the commercial property piece, it's mainly because they have good protections in place. And that's the main focus area for insurance companies, really to get that premium decrease on that line of coverage. As you can see on the right, not every single line of coverage is taking a decrease. Auto is very tough. It's been tough. It's going to continue to be tough. And really why that is it's really no shock. It's distracted driving and a ton of litigation around this. So what I would encourage from an employee perspective, a very strong written protocol in place for your employees that are driving either their personal vehicles for business use or commercial vehicles. I think it's very, very important to understand that distracted driving is not okay, whether you're on a cell phone, even if it's hands-free nowadays and you're trying to do a video conference, which I've seen sometimes, which is tough. It's very, very important to really crack down on that. But it's really because I put down here too, the nuclear verdicts. So even a single car accident, if there's a fatality or, God forbid, multiple fatalities involved, it's a tough outcome, not just for the business expense, but obviously the personal expense that goes along with it. And honestly, there's no slowing down in this space. And from a commercial auto perspective, around 6% increase is what we're seeing this year over last year. If you've had tough claims history, it could be upper double digits. Even if you've had no claims history, it's still going to be a slight increase. And the main reason for that is, again, insurance companies as a whole are seeing an increase across the board on the claims that they're having to be paid out, right? Even if it's not necessarily your company's fault or an adjacent company's fault that you do business with that impacts your loss control or loss history, they're taking rate on that line, and it's not really going to slow down in the coming years. So controls around this is integral, honestly. And then I put the umbrella down there as well. So typically auto policies, what you'll see standard is you'll have $1 million limit. And again, as I mentioned before, if there's a fatality or multiple involved, you blow through that $1 million limit very quickly. And so that increase is also leading into the umbrella or excess liability as well, which subsequently drops down once that $1 million limit on the auto policy has been exasperated. And so most likely seeing increases along that coverage line as well. Those are the two main still tough lines of coverage. But the remaining ones that I alluded to, and I'll talk about cyber and directors and officers here in a little bit, those markets are softening. And honestly, those types of lines they're using, insurance companies are using a lot of data and analytics to drive reasonable pricing. But the other piece is there's just more insurance companies now that want to write these types of coverages, right? And there's more cyber insurance companies that are out there now than there were 10 years ago by dozens fold, similar to directors and officers. And so what that allows in the competitive landscape on the insurance side is more competition, right? And so you have to win business from an insurance company perspective instead of simply just, well, it's between me and 3 other carriers. We're all going to price it the same. Good luck. And so I think that's important to point out. And those 2 coverages, which we'll talk about in a little bit as well, are incredibly important to organizations nowadays. And I'll explain why there as well. But I'll pause. I feel like I just talked for a little bit. If there's any questions in the chat or if there's other lines of coverage that you're seeing, these were just the main ones we wanted to point out with the material shift that's starting to happen on the insurance front.
So we'll continue the conversation about the insurance industry updates. Unless, Tarek, do we see anything in the chat?
Nope.
Okay. I'm going to jump in just for a moment and chat briefly about the consolidation. Matt mentioned how we're seeing rates decline because there's more competition on the carrier side, meaning there's more carriers in the cyber insurance space. There's more carriers willing to write directors and officers coverage. The opposite kind of is true on the broker side. So when you look at this chart on the bottom right-hand side, this is showing the number of mergers and acquisitions within the insurance brokerage space over the last 5 years. And you'll see the top of the bar shows the number of mergers and acquisitions amongst insurance brokers per year. And the middle circle is the total value in billions of dollars of the deals that transacted that year. So in 2025 alone, there were 652 mergers and acquisitions within the brokerage space. So what is happening is larger brokers are becoming larger. Mega-sized brokers are growing even larger by purchasing a lot of the smaller independent brokers across the country and throughout North America. And what this creates is larger brokerages, oftentimes a consolidation of services. What we always encourage individual companies to explore is if your broker, if your agency has been purchased, ask for information about what is going to change. Will you have a new service team? Sometimes a merger will actually bring more services to you as a client. Other times it could create a greater distance between you and your agent because an independent firm may have been purchased by a private equity or a publicly traded firm. So the chart on the bottom right shows the mergers and acquisitions activity over the last several years. Matt, anything you wanted to add on that point?
No, I think it's a good call out as well. I think be familiar if there is a merger or acquisition that's happening with the insurance partner that you utilize, and what does that mean specifically? Be curious in those situations. Ask questions. It could be better, it could be worse, and so it's more so just understanding, where you are and what's going to happen from a servicing perspective. But I would really encourage y'all to be super curious if that is happening or has happened to you in the past. And then I'll keep going too, Jen, on the specialty lines. I alluded to it before, but I'm a visual learner, so that top right graph is kind of what I explained a little bit earlier. It goes back to the 90s even here, but you can see in 2020 that peak again. And so it's cyclical on our side of the fence, on the insurance side of the fence. So what that means is you'll have hard markets and then you'll have soft markets. And it literally, depending on a collection of variables, even unforeseen variables like COVID, for example, which how would we predict that, right? You see the spike around 2020, and now it's slowly starting to come back down from a holistic premium perspective. And I think it's really attributed to insurance companies after 2020. One, there's more of them in the space. Doesn't matter the line of coverage, meaning there's more capacity out there. So there's a lot more options to actually procure insurance than there were 5, 6 years ago. A program maybe 5 or 6 years ago needed 7 different insurance companies just on the property insurance piece alone. Now that could be 2 or 3 insurance companies on that same limit for the property piece, just because of the competitive landscape and the capacity that these insurance companies went to get their what's called reinsurance. So insurance companies have their own insurance and they buy it, right? And so they've purchased a boatload of that. And since there's more players to purchase reinsurance, there's a greater capacity to lower premiums and keep the terms and conditions where they need to be too. So just wanted to point that out as well. This is my favorite topic. So hopefully there's some suggestions in the chat of either hypothetical situations or situations that you faced before, but golly, this is a massive topic. And it has been for the last 10 years. It ain't slowing down. It is integral that businesses nowadays purchase a cyber liability policy. And not only that their program extends to the third-party liability. So cyber liability is obviously been a hot topic for a while. In your particular space, there's 2 areas that I want to focus on that I've seen attacks been on the increase in the last 2 years. One of them is ransomware, and one of them is social engineering fraud. And I'll explain both of them and how insurance fits into that as well. The ransomware piece, pretty simple. Somebody hacks in and shuts down your system or locks it, freezes it, and says, pay us X, Y, and Z, and I'll give you your system back so you can continue to be on your way. This has been around for a while, 7, 8 years. They used to ask for an exorbitant amount of money. They used to ask for hundreds of thousands of dollars, and now they're targeting smaller organizations and maybe asking for 10,000 or 15,000. And so if employees aren't educated that, 1, don't pay that ransom, doesn't matter the cost. And 2, if that event does happen, you need to fix however that person got in and make sure it doesn't happen again. There's going to be a massive problem, and not just for you, but spilling down to the supply chain as well. And so that's still out there. They're utilizing, now artificial intelligence to even make voices sound similar, make video calls to sound similar to try to, show you that if they're hacking into your system, you literally need to pay them. And it could look like somebody which is so scary. And so be on the lookout for that piece from a ransomware perspective. But the biggest piece that we see, and not just, specific to food and agribusiness companies, is what's called social engineering fraud. And that's a sweet term that we use on the insurance front, right? But it's essentially an employee voluntarily parting with money, right? So back in the day, if somebody, gave away money, it was never covered on the insurance front because your employee's giving it away, right? Well, now they're being duped into doing so. This is the most critical claim that we see come in, multiple on a daily basis, where it could look like a legitimate customer that you do business with. Even the email matches, or maybe it's 1 letter off, right? And you've been sending them money for years. It looks rudimentary. It looks exactly like what you've been doing for 15 years. Make sure it is. Have some sort of multi-factor authentication in place where if it's any sort of dollar amount, you can determine what that is and what's of importance to you and your organization on that front. But make sure when you're sending any money, you know exactly where it's going to via authenticating through a third party. It's critical. most cyber insurance policies now will make it a condition. They won't write your cyber insurance unless you do that. So I've been starting to see a lot more of that pick up. But this is one of those things where, again, with AI too, you could get a call and they leave a voicemail for you and it sounds exactly like your customer's voice, right? And then even if you email them back and say, hey, I got your voicemail, just wanted to confirm that I'm okay to send this. Well, that bad actor is monitoring that email address, right? So they can, even that bad actor who's hacking into the system can email you back and be like, yeah, that was me. I did do that. So make sure that you talk to somebody on the phone that you trust. It's better in person if you can do that as well. But make sure that go through as many lengths as you can to make sure that you're not voluntarily parting with money, because it's getting harder and harder to be tricked. And so employee education's massive. A protocol for this is absolutely massive and necessary. And it leads me to my next point too, that, you know, in the center column there on the reputational risk. So if you have a cyber breach, which, let's be honest, most companies either have had one or they've been breached, they just don't know it yet, right? There's kind of those two buckets. How are you going to be perceived in the marketplace, to your customers, to your suppliers, to your buyers, right? If you had some sort of data breach as an organization that subsequently affects their revenue stream, how susceptible are they going to be to continue to do business with you versus a competitor? And so I think it's a sought after thought with cyber liability nowadays that if you have an attack, you get it covered, hopefully under the insurance piece, you have a solid protocol in place, but other people still in the marketplace know that happened to you, right? And so there's something to be mindful about that, right? So having a good, robust cyber insurance program that not only covers yourself, which is on that first party piece, but also third party. And this is where I want to kind of hammer home as well here. Just because you as an organization have a robust cyber insurance program, you still don't know what your third party customers or suppliers or whomever, what their program looks like, if any, right? And so let's say a third party that you get all of your raw materials from has a cyber breach. Well, you're no longer able to get your raw materials for that day, 3 days, a week, whatever, and you subsequently lose revenue because of that. Even though you as an organization have a great cyber program, they might not. And so your cyber program should also include the third-party liability coverages, which extends to an example like I just shared. So if there's some sort of lost income, which is called the contingent business interruption or business income coverage for a third party having a cyber breach, that's a massive takeaway. Make sure that your cyber program includes the third-party coverage for that very example. Because not only that, I think for insurance carriers, if it's built in third party, it shows you as a good insurance buyer. It shows that you care not only about yourself and your organization, you understand risk more holistically. And that's only going to make you more favorable in the insurance marketplace too, if you're asking some of these questions and kind of understanding the why behind it. And then two last things on this coverage, because I can nerd out on this all day. One thing is ask your customers if they have cyber liability. And if so, get a certificate of insurance that they show that, right? So it further insulates you as an organization for subsequent claims that come from a third party perspective. And that dovetails into the last piece I want to touch on. We've been seeing a lot of contracts require cyber liability now. You know, 3-5 years ago, it'd be great if you had cyber, but it was never a contractual obligation, right? Like general liability, or if you're rendering a professional service, errors and omissions, right? They want to see you have these coverages. Cyber's becoming one of those. They want to understand and feel comfortable with who they're doing business with, that they are protected from this.
No, I was too strong. I took that.
And so I think it's super important to, one, be on the lookout for
Brad.
it. And then the other piece too is try to make sure the customers that you do business with, I mean, make a business decision, but I would highly encourage that you get some sort of official documentation that these third parties with whom you do business have cyber liability in place. It further insulates you.
Matt,
And then
Matt, I can jump in there too, and just kind of add on to that point. I think it's a good recommendation. I feel like when we come across a lot of these agribusinesses and we look at, what they may or may not have from a cyber coverage standpoint, there's a couple different things that we see. One, we see customers that don't buy a separate cyber liability program, right? And they're kind of relying on maybe what they have within their package policy with their general liability carrier, or they just don't have the coverage. Or they have a separate cyber liability policy, but maybe don't understand some of the limits that go with it. And so I'd say if you're involved with the insurance at your business and buying the insurance, take a look at what you have. Is it you relying on, the $250,000 sublimit within your general liability policy, and that's all you have, and it doesn't really provide the business income protection or the right cyber crime coverages, right? Or if you do have a separate policy, what are your limits within there? One of the things I was going to point out as you were talking, Matt, about the social engineering and the fraud, right? Those are the most common claims that we see, but at the same time, we call those coverages cyber crime coverages, and those cyber crime coverages are almost always sublimited within your policy to a very serious amount, right? So if you buy a $1 million cyber policy, we're seeing the cyber crime and the social engineering capped at 250,000, right? And the invoice manipulation capped at 250,000 or 100,000. And we see other things like the business income or the ransomware, sometimes sublimited too. So I think if you're involved with the insurance on your business, just understanding what your limits are, and what the true coverage that you have, and if you need more limit.
Yeah, that's a really good point. I appreciate you chiming in on that.
Very good point. Very good point. I also wanted to add a little kind of anecdotal information. We were consulting with one of our agricultural cooperative clients recently, and they have seen a huge uptick in fraudulent purchase orders coming into their sales and shipping teams. And these are purchase orders that appear to be from legitimate clients, and their team is very astute and caught one recently simply because the logo on the purchase order looked a little fuzzy. It didn't look like the sharp logo that their clients' purchase orders typically would look like. And so there has been a huge uptick in the shipment of product to criminals. And once you ship a product, it's like shipping money, and it may be lost or it may be covered under the insurance policies, depending on how they're structured. So in addition to the social engineering fraud, creating a financial loss, there's also product loss that we're seeing throughout the industry.
That's a super good point that you bring up. And on the insurance front, it's called tangible property. So on your cyber policy, for the example that Jen just gave, make sure it includes coverage for tangible property, not just, a EFT transaction, right? If they reroute a shipment and it just gets lost, that's still money. You want that covered under the cyber policy as well.
Exactly. So moving along to the pollution topic, which is also a topic of interest to a wide group of agribusinesses and food processors. Tarek is going to take this section.
Yeah, a wide spectrum is correct. I think we like to say to most of our customers, if you're in business and you have employees or you have a product, you most likely have a pollution exposure. It probably doesn't get talked about as much as your other business risks. And then certainly as we get into agriculture, that pollution exposure and that pollution risk grows even more significantly. So I think first off, just kind of understanding, maybe to get the people on the call thinking about what pollution risks they might have. I think it's worth diving into and understanding your operations and thinking about the pollution risk that goes with each of them, right? So, from the crop growers, whether it's specialty or row crops, thinking about the nutrient runoff, if you have nitrogen or phosphorus running into the nearby waterways, if you're using pesticides and herbicides, certainly spraying chemicals, whether those chemicals are getting into the soil and contaminating the soil, getting into the underground water or reserve or the nearby pond and contaminating the water. Both of those obviously serious liability threats and the costs that go with those things. Overspray, drift, right? Chemical drift. So you're spraying your fields, that those chemicals that you're spraying get into the neighboring land and you have liability concerns there or property damage concerns there. Similarly with the manure use, and then from a transit perspective too. So trucks on the road, product on the road, we'll get into like exactly what may occur in those situations, but any of those types of things that you have going on in your business, you do have a pollution exposure. And most likely right now, if you don't have a separate policy for it or the right endorsements, it's likely not covered on the policies that you have. We kind of call those policies the base coverages, right? Those policies that you're most likely have in place right now, the general liability and the auto. Well, every general liability policy in the marketplace is going to have a standard pollution exclusion. There's a list of, I don't know, 13 to 15 different exclusions, standard exclusions that come on every general liability policy. And pollution is one of those. And I actually tried to pull it out just from an example coverage form there. I don't know if people on the call can read it. But it says this insurance does not apply to bodily injury, property damage, advertising, or personal injury arising out of the actual, alleged, or threatened discharge, dispersal, seepage of pollutants. And then there's a definition of pollutants down below there as well. And you'll notice that definition of pollutants is very broad. It does not get very specific, which is concerning, right? Any solid, liquid, gas, or thermal irritant or contaminant. So the exclusion on your general liability policy is very broad, and most likely if you don't have any endorsements on there or separate policies in place, any type of overspray, contamination, pesticide, herbicide type event or liability exposure that you have would go uncovered if a separate pollution policy was not in place. Those general exclusions that apply in the general liability also we see on the auto, right? So typically, if you had an unendorsed auto policy, the standard auto policy that carriers will often give you, they're not going to pick up any type of pollution incident either. So a truck, you have a truck on the road delivering some type of liquid product and it tips or gets in an accident, and that liquid product is getting into the ground, getting into the waterways, the cleanup costs that go with that, excluded, not covered. One fix that we often work with our food and agribusiness clients to make sure that they have on their policy is a certain endorsement that carves back some of that coverage. For the insurance nerds, we call it like the CA 9948. Matt and I were joking that all of our policies for our customers must include this. Essentially what it does, or the intent of it, is to carve back some of that coverage for pollution incidents on the roads. So the bodily injury aspect, the property damage aspects, the cost for the monitoring, the cleanup, the removing and the containing, whatever it may be, some significant costs that come with that, right? So making sure that one simple endorsement that probably doesn't even come with any additional premium is on your auto policy so that you can have incidents like that covered is important. Separately, the other issue, or the other solution rather, would be a separate pollution policy. A separate pollution policy, not necessarily one of the more expensive policies out there, probably, average cost, I don't know, $5,000, $1 million or something like that. But what a pollution policy will come with would be both first party coverages and third party coverages, kind of similar to what Matt was saying earlier with the cyber, right? So from the first party side, the cleanup costs, the emergency response, the reputational response, the third party cost, any of the liability that comes with it, transportation, and obviously the defense portion as well. So very, very similar in the cyber aspect or from those aspects, I guess. And then I think this leads nicely, Jen, into the next slide with the drone liability. So in some ways, it goes back to those exclusions that we see in the base coverages. One of those other exclusions that we see in the base general liability form is for aircrafts, auto, or watercrafts. And it says bodily injury or property damage arising out of the ownership, maintenance, use, etc. of an aircraft or a watercraft. And so for most businesses on the call for dozens and dozens of years, that was not a true concern until drones were introduced. And as we've seen a serious uptick in drone uses, especially in the agricultural space, I think it's worth pointing out that similar to pollution, separate coverages may be required, or at least worth consideration to help protect your business. So as of right now, if you're using a drone in your business to spray crops, any type of liability that comes from that, overspray, drift, collision, currently not covered on your general liability policy. And so there's other solutions out there or policies out there, drone liability being one of them, a true drone liability policy that would pick up the defense costs and the liability concerns there. Other coverages like hull and equipment for the actual physical damage to the equipment itself, to the spray systems, to the cameras, to the sensors, and to the actual drones. And And then we just put some other underwriting considerations there if you're using drones to make yourself a better underwriting risk, maintaining the right records and logs, making sure you're certified, making sure you have the right safety features. The geofencing is a big one, right? To avoid some of that chemical overspray or the drift into the neighboring plots, making sure that your systems are squared away there. All good underwriting practices. I'm gonna pause there and check the chat, making sure that there's no questions. I don't see any.
So if there's no questions at this point, we have about 10 minutes left before the formal Q&A period. And in that 10 minutes, Matt is going to touch on the directors and officers liability, and then we'll leave you with some tips. In addition to the tips that you've already heard, in order to be a more informed purchaser of insurance. Matt?
Yeah, thanks, Jen. So directors and officers, also known as management liability, for a broader term as well. Super, super important. And I'm going to harp on the main reason as to why is because the directors and officers for companies, their personal assets and personal net worth can be at stake if they make a decision that leads to some sort of financial loss for the organization that somebody doesn't agree with, right? So I'll give you a clear example. If you have outside investors, friends, families, even an equity backer, even if it's a minority share, they're expecting maybe 10% rate of return, and that was communicated to them, and that's probably why they invested, or maybe not, right? But they maybe end up getting a 4% return on investment after the set amount of time, right? 5 years, call it. Well, they can come after you legally to say, I expected 10, I got 4. I think it's because you as a director or officer or a key stakeholder, right, decision maker, made some bad decisions. And you need to pay that 6% delta that I expected, right? This is an easy example to share. And so they'll name these people personally in the lawsuit, in addition to the entity. So directors and officers, again, doesn't just cover the entity when they're named in a lawsuit. It covers the actual individuals if they're a director and officer or a decision maker in the organization personally. And so that's super important, especially when, let's say, the economy's not doing super well and people are looking for ways to obtain money that they were maybe shorted or slighted that they think, right? Even if you as an organization did everything right and you laid it out in writing for these individuals or these companies that were investors, right? You still have to pay to defend yourself that you didn't do anything wrong, right? And directors and officers covers that duty to defend piece where the insurance company will defend on your behalf to prove that. So you don't incur that expense as an organization. And again, even personally, right? I mean, they can go after your homes, your jet skis, your boats, your cars, whatever, if you're found personally negligent or liable for some of these things. If you do not have directors and officers coverage, that's very, very scary. And so this is one for me that's, again, to Tarek's point on the pollution piece, relatively inexpensive. And there's more carriers out there now that are willing to offer this type of coverage. But I really harp on just the personal asset protection, let alone the entity protection as well. Just because a lot of these owners, and key stakeholders, they have some substantial net worth in a lot of instances, whether that's monetary or whether that's real estate or whether that's, whatever asset, it's still personal to that individual. And this policy protects you against from, having to relinquish some of those things if you were at fault for something. And the last thing, and then I'll stop, is employees can also bring suit against you as well. So let's say you have a disgruntled employee that they were banking on a bonus if you hit all of your numbers this year, right? And you didn't hit all the numbers as an organization, so that employee didn't get the bonus. Well, they're frustrated. They can sue you and be like, we didn't get our bonus because you did that or whatever. Again, you still have to pay to defend yourself, even against an employee there. And so it's very, very important to carry, relatively inexpensive. And again, it helps protect against the personal assets of these key stakeholders.
Very important points for all agribusinesses and food processors, especially those that may have board of directors who are advising the company. And our last topic that we wanted to touch on is really, as I mentioned at the top of the hour, knowledge is power. Giving you some knowledge and questions you can ask of your insurance broker to make sure that you're getting the most out of what you're paying for your insurance program, as well as kind of a holistic understanding of the role that a broker would typically play in the food and ag space. Tarek?
Yeah, and I think that's a good start, Jen. I think when we're thinking about, for the people on the call who purchase the insurance for their business and think about where they start. And I think a good starting point is just understanding what a direct writer is versus an independent agent and the roles of both. I think specifically in the agricultural sector, we see a little bit more of the direct writer, certainly for the smaller agribusinesses too. And a direct writer would be somebody who you're working with an agent who works directly with the consumer, right? Whether that's an individual or a business, that agent works directly for that insurance company. They have access to that company only, and they deliver those products to you versus an independent insurance agent or broker, as they're often called, works for you, works for the client. And they have access to many different insurance companies out there. And they're shopping to find you the right coverages that you need for your business at a good price, with the right terms. You can do a little bit more of that negotiation, and playing that true broker role. So figuring out what's best for you, I think there are pros and cons for both. Certainly for the smaller companies, personal lines, the country financials, the rural mutuals, the state farms can be good, can deliver affordable products. But I think as we'll get into here, some of those things that they can't provide would be those additional services, the access to the other companies, that an independent agent might have. So what role does an independent agent have? Or what role does the broker play? Jen and Matt and I often joke that placing the insurance is a third of what we actually do. And when we're talking with our customers or with our prospective customers, it's what are those other things, those other areas where an independent agent can support you or can offer you? So from a risk management standpoint, can the independent brokerage firm offer you different risk management services that you're not currently getting? Or at the least, can they work with the insurance companies that you're with and get them to offer some risk management services? Can they huddle with your team to do a mock recall or a mock cyber breach, and understanding where your business continuity plan and your breach response plan is at for those things? Those are all additional resources that can be available to certain companies if you know what to ask for and what to expect from the broker. And similarly on the consultative side, whether it's your needs for better understanding what your OSHA compliance or your DOT compliance is, having somebody like a Jen who's on the call who is so good with the government side of things, and the grants and the trainings and the resources from a safety perspective that are out there for you. Are you getting any of those things? And then obviously from a claim perspective too. So I think as you're thinking about those things, whether it's considering moving from that direct writer to an independent broker, or if you're considering moving from one broker to another, understanding what those resources are, what those value adds are from the broker side, and what they're bringing to you, in addition to the marketing strategy, right? Huddling before renewals and figuring out what the goals to accomplish at the renewal are. Understanding their specialization. Do they have a food and agribusiness team? Do they have a food or agribusiness expert who's ingrained into the industry and working in with it every day with those types of customers? Do they have good relationships with their carriers? And then obviously the value added services and what they're able to offer you in addition to placing the insurance. So that's what we always encourage for additional discussion.
And really what our hope for today's webinar was really information sharing, leaving you with some specific topics that you can take back to your business to help you be a safer operation, to help make sure that your programs are robust and that you are a more informed insurance buyer. That's all that we had for today's conversation. I'm going to stop sharing my screen. And I will turn it back to Tom if there's any questions in the chat. Looks like we might have one chat question maybe.
Don't see any.
Nope, I don't see any. Any questions from those on the call?
I don't see any other questions there in the chat either. Yeah, I'll open it up for questions if anybody has any.
Thank you, Joe, for the applause. I see Joe Lerman giving us a little applause. That's much appreciated.
High five.
Thanks, Joe. It's been an absolute delight being able to support the Minnesota AgriGrowth Council, one of those rare associations that brings together every single segment of the